And welcome to week 3 of our uh, mentorship, and it's been a very wonderful journey so far. By now, you understand most of the basic things, and now we are getting into, although we are still on basic things generally, but we are getting into more interesting things that would help you begin to try to look for opportunities in the market to take sell positions or to buy, right? You already know about buy and sell now. If you don't, go back to week 2 or week 1 and watch all of the lessons all over again. So this week 3, we are looking at technical analysis essentials, and we had a whole session on technical analysis. So I'm not going to start talking about what is technical analysis all over again. Then for this first lesson in week 3, we are going to talk about support and resistance level. Finally, we are here. So today's lesson is the foundation of technical analysis, understanding support and resistance level. So this concept will help you to predict where the price might stop, reverse, or break through, giving you the edge to make smarter trading decisions. That is all that this is. All we are doing in the market is looking at where price is going, the difference between the prices between two currencies, and trying to get into where we can get profit. Today, gather some profit, tomorrow, gather some profit, make some money for ourselves. That is everything that we are doing here. So by the end of this lesson, you would know how to identify support and resistance on a chart. Use them to find good entry and exit. Exit could be losses, it could be profit. In forex trading, we picture these things differently, right? And then lastly, the understanding of this part of our lesson is going to help you avoid mistakes that beginners make. Not even only beginners, a lot of traders. We have amateur, intermediate trader, and professionals. They still make some of this error, right? But when you understand these things, it reduces how these errors occur. So the first thing is, what are support and resistance? Support and resistance, maybe because I know it, I feel like these words are just direct meaning. Oh, this thing is supporting this thing, and this thing is a resistance to this thing. And what thing are we talking about? The price. So what are support levels? Think of support level as a floor, flat, right, in the market. And it is a price level where the market tends to stop falling because buyers come in play and push the price back up. What you should notice here is, number 1, stop falling, and number 2, buyers. Those are the keywords in support, right? Let me give you a classic example. That is why we are using TradingView today for our lesson. Look at this region here where I have this bracket, this square drawn, right? This rectangle, or whatever sign that is called, drawn rectangle actually. Whenever price came to this area, what happens? It goes back up. Came to this area, what happened? It goes back up. Came to this area, what happened? Go backward. Came to this area, what happened again? It's holding it. So what does that tell us? That is a support. Classic example of a support area. Another one I could see from here would be somewhere around here, though that is very tiny, but that place is holding it like in the palm of his hand, or like a floor, literally. So let's use a real life example. A real life example is, imagine dropping a ball, right? I should have brought a ball for this course. Imagine dropping a ball and it hits the floor. That is the support, floor support, and bounces back up, right? Basically. So in trading, when the price drops to a support level, it bounces back upward because what? Buyer sees that place as a good deal. You feel like, oh, every time it came here, it goes back up. Oh, it's coming again. Let's wait for it. Let's buy from there. Simple, right? So let's move into resistance. Resistance basically is the direct opposite of what the support is. Resistance, think of this as a ceiling in the market. It is the price level. If it is opposite, then that means that it is a price level where the market tends to stop rising. Support was what? Stop falling, right? So resistance, stop rising. because sellers, that's the keyword here, step in and push the price down. Let me give you an example again. So this area is such a good area to explain this with. Look at those two places. Market came here, dropped. It didn't go very far. Although you could also picture this happening here as a resistance, but I will explain why we are considering this one above in the furthermore in the lesson. Comes here and fall. So that place is a resistance. This place is a word. Let's type that. Resistance. And this place is a word, support. Basically, simple as that. All right, so let's move on to the next one. Oh, before we move on, I think I have an example of a real life scenario just like the one we are using in support. This example is saying that the same ball now hits the ceiling resistance, and when it does that, what happens? It falls back down. So in trading, when the price rises to a resistance level, it often reverses downward because what? Traders start selling. That is that on that. Remember, we have this transcript. I'm going to have it below this video, so you can also go there and read up in case you need that. Let's move on to number 2. So why are support and resistance important? Just like we said on our introduction right here, but let's have it all over again. Number 1, it helps us to predict markets movement. They help you guess where the price might reverse or break out. Hold that breakout in your mind because we are going to explain what that means. So all that support and resistance, one of the things that help us to do is to predict what the market might do next. Where is it going? When it takes off from here, where is it going? And anybody that is able to predict correctly takes home some money. Number 2, it helps us to find entry and exit point. And here is why. When we buy near support, the price we are buying is cheap. And when we sell near resistance, the price is called expensive price. Let me explain. So let's say right here, my decision here will be to sell, right? Oh, I got this place. This place is expensive, so I'm selling it. Expensive, why? The price here is high. That's basically what that is saying. But when we buy at a support zone, what happens? The price is cheaper. Imagine somebody start buying from here. They will start losing money because the market did not even go in that direction. Don't worry. Like I said in our course, don't take it to heart. Just look through this course and take what you can stick with. For a start, when you start trading, you would understand these things. It will become natural to you. So it helps us to find entry and exit prices, or exit points rather. And the last one, which is very important to me in my own trading journey, is one of the most important things. It helps us to set stop loss orders, because place stop losses below support when buying and above resistance when selling. So if I'm buying, guess where my stop loss will be? Be below here. If I'm selling, guess where my stop loss will be? To be above here, right? Simple as that. We're going to refine this, but this is the basic. This is how it is done. It doesn't have to be complex. It's forex trading though, but it's not complex. All right, that is that on that. That's why they are important. Let me recap on that. Helps you to predict market movement. Number 2, find entry and exit points, and also to set stop loss orders. All right, let's move on to number 3, where it gets a little bit more interesting. So how to identify support and resistance on the chart, because we are just talking about it. How do I do? Does it always look like this? If it doesn't look like this, how do I identify them? There are 3 ways to identify them. Number 1, you look for price reactions. Number 2, we can use trend lines. Now, what we use here is just a straight line. We can also use trend line to find support or resistance, because sometimes the support does not look straight like this. Sometimes it's slant. Let me find a classic example for us. For example, there was, this is a trend line, the one that can bend simply is called a trend line. Pardon me, let me just use those words. So let's say we have not had this happen in the market. This side has not happened. Look at how prices was going here. It did not break below here. That is also a support. Don't get confused. We are going to explain it deeper. All right. So then the third one is use of round numbers, and I'm going to tell you why round numbers like 1,000, like look at the side of the price here, like 1.57 thousand, 1.858 thousand without the dot at the back, how those two can be useful as well in identifying a support and resistance level. Let's move forward. So let's pick number one, the look for price reactions. For the support, areas where the price bounced up multiple times, basically. So let's say if prices bounce off an area, we use area, mind you, area, because it will not be sharp like this particular price. Like this blue line is marked on what price? 1.65299. It will not be super accurate, but around that region, if prices is doing what you are saying on this place, which it can do in other places too at another price, and bounces off it and goes up, mind you, goes up, area where prices bounce up multiple times, that is the support. And resistance, area where the price got rejected or reversed down several times. So here what happened, market reversed down several times, like 1, 2, each candle, look at each candle, 1, 2, 3, 4, like 4 times it bounced off that price, right? So a tip, zoom out on your chart to see historical price point where this price bounces happen. If I zoom like this, by the time you train your eyes, these things will be more better, right? I will be able to see some places where prices are bouncing off a certain area, and then I will teach you how to refine them as we go in the lesson. All right. So number two, use trend lines. Draw straight horizontal line across areas where price frequently reverse. That's one. In uptrend, guys, I think this is the first time I'm really mentioning uptrend. Let me pick a tool that helps me to draw to illustrate. Uptrend is when market is going up, even though it's not just going to go up like just straight. Sometimes it will be doing like this, back and forth like this. Don't mind my drawing. That is uptrend. And downtrend, I need that tool again. Downtrend is when market tends to be doing something like this. It can still, it will not be too smooth like this, so but this is downtrend. All right, so let me refine this drawing. Give me one line. I like black, give me black. All right, so let me refine this drawing to explain better. So use trend line. So it's telling us that draw straight horizontal line across areas where price frequently reverses. All right, in uptrend, this is uptrend. Let's say the market looks like this. It's my uptrend now. Wow. Focus more on identifying support level. Whenever the market is going up like this, what you should be focused more is area of support. Remember, let me remove this. Remember, we use area, right? So in what I just drew now, this could be an area because this place is supporting this place, right? So that's what we focus on when we are going up. And when market is in downtrend, when market is in downtrend like this, no, the other way now, delete. When it is in downtrend like this, what you are going to be focused on is what? Resistance. If it's going up, we are concerned about support. When it's coming down, we are concerned about resistance area. All right, so it could be here because this place is resisting it from going up, goes there, bounce off, right? So that's what we'll be concerned of depending on the trend. Let me go to the market and try to identify these areas for us so that you understand that place better. For example, this is up, this is going up, right? Where you be concerned about is every time that the market come and bounce off an area, it bounces off here, this is a support area, then it started going, nothing was stopping it to, then it reversed here, and when it reversed here, what happened? It started to, right, another support area here like that. So you identify that. Let's see when the market was going down, for example. So from here to here, market was going down, right? What did the chart say we'll do? We are going to look at resistance area. For example, look at this area. Market was going down, this black candle came up and could not go and fell down. And when it came up, it could not go and did what? Fell down from here before it now changes again. In fact, if I extend this place, you will see that this place was a resistance for a while, right? So that's how we roll. Additionally, the third one is prices like 1.000, 1.2000, 1.5000 often act as psychological support and resistance because traders naturally focus on round numbers. Remember we spoke about sentiment, right? Traders will have the sentiment that, oh, banks will not be dealing with random numbers. I don't know whoever invented that, but the banks are going to, the big guys are going to be dealing with whole numbers. So we also have trained our mind that, okay, whenever I see a support and resistance zone like this one that I draw this line, I'm going to adjust the line. I'll teach you how to use this tool, but I just want to adjust the price to a random whole number. You know, it has 99 at the back. Let me take it. Let me show you again. What was the price on this? The price of that line, come on, is showing, okay, it has adjusted to 5,000, right? A round number. That's what we mean by round numbers. So whenever we draw our horizontal line, we try to just find a round number. Those are the three use of how to identify your support and resistance. So immediately you identify support and resistance, what is the next thing that you do? How support and resistance work, right? After we identify them, what are their meaning? What is their impact to you as a trader? That's what we are looking at in this number 4. So the number 1 is that role reversal, flip zone. When the price break, when the price, that is the market, whenever you hear price, we are talking about the market. When the price break through support, that level can become new resistance. Let that sink in. When the price breaks through support, break like this, boom. You know, normally we said it will come and go back, but it breaks and it could now become a resistance. It could break this place and could not come back up again. That place has become a resistance, right? When the price break a resistance as well, it can become a new support, right? So let's take, for example, Euro USD was stuck at 1.200. That's a resistance, right? Resistance is where, again, roof on top, right? Then it breaks above that 1.200. That is, the price rose above that price, right? Then later the price falls back down to that 1.2000, holds as support instead of resistance. So you understand, role reversal, flip zone. Take note of that. Let me show you that practically as well, because I've seen that happen here. Look at this place I drew, right? This place was a resistance here, right? There was a resistance here, right? Then what did price do here? Price broke through and price came back down, but at first that place did not hold support, so it broke below again. So what happened? It came back up, the resistance was still holding, went back down, came up, resistance was still holding, went back down, came up, broke it again, and came back to the price. And what happened when it came back to the price? That region or that area became a what? Support, and then it now pushed up. Simple as that. I saw that and I loved it. It was a classic example. So second one is breakout and fake out. I spoke about fake outs, was it 2 lessons ago? So breakout, when the price breaks through support or resistance with strong momentum. So for example, what do you mean by strong momentum? When there is a succession of the same type of candle, right? Usually that might mean a strong momentum. So when it breaks a support or breaks a resistance, right, that can be a breakout. And when it tests that place and the support change to resistance or resistance change to support, we can confirm it as a breakout. While a fake out, a false breakout where price breaks briefly before reversing quickly. So for example, it's, look at here, see where my mouse is here. I'm sure when this happened on lower time frame, it looked like it had broken out, but then it reversed and even made a wick. That is an example of a fake out. On our live session for this part of our lesson, I'm going to find we are going to find even better examples together and use the replay function so that you see how price is moving. All right, so tip to avoid fake out, you have to wait for confirmation like strong candlesticks or high trading volume. So for example, if I wanted to trade this, I need to see a candle above here first. Like example of this now, this candle formed a body above here, went up and came down, and this one did not even go under. This is a confirmation for me to continue riding this guy up. That's what they mean by confirmation. All right, let's move on to the next one. So the next thing, number 5, is trading strategy using support and resistance. When I was putting this part in the lesson, I'm like, oh wait, do I want to start giving you trading strategy now? But then it will still be useful for us. Just keep this somewhere and put it in your notes or so. So trading strategy using support and resistance. Number 1, we have what we call the bounce strategy. This is reversal trading, where we buy near support when the price bounces up, right? So near support, you buy. Look at this support, right? This is the only place where you are allowed to buy. You're not allowed to buy in the middle of nowhere. It has to be at a support area, and you sell at a resistance area. So when you see a resistance and that's occurred multiple times, for example, oh, my lights just went off, but I will continue like that anyways. For example, I hope you can still see me. I'll try to increase the brightness on the editing. When this happened, this area looks like resistance, because remember I said we could draw our resistance in a slant manner. So if I slant this guy, I'm only allowed to sell around this region when I see some confirmation, of course. To take years of practice, but that is how it looks. So you had confirmation using candlestick pattern like pin bar or engulfing candle. Remember, we have engulfing candle, that candle that is big after it swallows a previous price, right? Then we have breakout strategies. These breakout strategies, You enter trade after a breakout or strong momentum. This is what happened here. After a strong breakout is where you enter. Of course, you have to also wait for confirmation, right? Then place stop loss below the breakout level. I told you that earlier, for buy trade, or above breakout for sell. So what trend line, what support analyzer help us to do is to put our stop loss below support or above resistance. If we are buying from support, we want to put our stop loss below the support. If you are selling from resistance, we want to put our stop loss above the resistance. Then we have the retest strategy, which is the most popular one among traders. After a breakout, you wait for the price to retest the broken support level. If it holds, it's a good sign to enter the trade. This helps avoid getting fake outs. Let's look at that. That area is such a beautiful example. You see, when this one broke out, if I use the breakout strategy, I will have buy here. And when it came, I will have been in losses again because it did not hold it. But look at this one. When it broke, it did not only break, it came back to retest and showed us some wick around the price and gave us opportunity to enter for a buy. Those are some of the strategies that I use personally. I'm going to show you how on our live session more. All right, so these are common mistakes that should be avoided. Number one, relying on exact price point. Like I told you, if you just look at this blue line as, oh, this is the support, gone. Here it did not touch it, and the price, this is a live market, the price might just pick up and come and break this resistance and start going up. But because you were waiting for exact price, it might not happen. So you avoid, don't rely on exact price. The reality is that support and resistance are zones, not exact lines. So price can slightly move above or below before reversing. Number two is that ignoring the trend. Always trade in the direction of the trend. For example, focus on buying in an uptrend using support and selling in a downtrend using resistance. So whenever price is in an uptrend like this, your mentality, you are seeing the price is going up, right? Your mentality is to do what? Is to buy. If you want to sell, you will lose in long run or just make some more money and suffer. Just small money and suffer. But when the market is also falling, you are seeing a structure. We are going to do more of structure in our live session. You are seeing more of structure like this. Your mind is telling you to sell. That is the action to take. All right. So, and the last one is not waiting for confirmation. Jumping in too early can lead to losses, especially during fake out. Just like we have explained in some of this example, confirmation is good. There are ways to identify confirmations, and we'll get into training more even when we start doing strategy development. So practical exercise, I want you to open a candlestick chart, especially Euro USD, that's what we are sticking with, and identify 3 support and resistance level. Go through the definition again and identify 3 support levels. Then look for areas where the price has bounced or reversed multiple times. Then draw horizontal lines to mark these levels. I'm going to make a video on MT5 to show you how to draw horizontal lines. All right. So our take home is support is floor. Price tends to bounce up at a support. Resistance are ceilings. Price tends to reverse down from a resistance. Then these levels help you find entry points, exit points, and manage risk. And lastly, okay, second to the last, row reversal happens when support turns into resistance and vice versa. Then always confirm breakout to avoid fake outs. And with that, we have come to the end of this particular lesson. I will see you in the next one. Cheers.